Well, folks, it really happened. The Bank of Canada has raised rates by 0.5%. This is quite unbelievable. Just to put that into perspective, the last time the central bank raised by 0.5 percentage point, so by 0.5%, was in the year 2000. That's 22 years ago. So what is that going to mean? Well, because it's going to be more expensive for the big banks to borrow money to be able to lend out to us, that means that within a few days, likely the big 5 banks are going to raise rates from the current bank prime rate of 2.7% to 3.2%. Well, that is big news, but what does it all mean to us? So if you have a fixed mortgage, there's no immediate impact on your payments. Those with variable rate mortgages, again, most of the variable rate mortgages out there actually won't change in terms of your payment. However, more of your payment will go towards the interest and less towards the principal. That likely means that it'll take you possibly longer to actually pay off that mortgage because you're paying more interest. There is something, however, called the trigger rate for variable rate mortgages, and that should be in your mortgage contract that you got, that I'm sure you guys have all read from start to finish. Variable rates rise above this certain trigger point, then the banks can actually increase your payment in that circumstance because they still want to make sure that you end up paying off your mortgage within that amortization period. So now let's take a look if you were about to enter into the real estate market to buy, whether it be your principal residence or an investment property. So the bank's prime rate is going to be going from 2.7% to 3.2%. Generally speaking, I looked at one of the banks, and one of the 5-year variable rate mortgages they offer is prime minus 0.7%. So you're looking at, before this hike, you were looking at 2% mortgage rate, and now that would jump up to 2.5%. So what does that mean in dollars? Well, let's take a look at a few examples here. $500,000 mortgage, you're now looking at an extra $125 per month. On $750,000, you're looking at $185, and on $1 million mortgage, you're looking at an extra $250 per month. So these are some of the numbers that you're going to have to consider. Those with HELOCs, this is a home equity line of credit. As an example, if you have a typical rate for a good creditworthy customer, might be, for example, prime plus 0.2. So the prime rate, again, 2.7, in this case, would people were paying about 2.9% on their HELOC. Now with it going up to 3.2%, you're looking at 3.4%. So if we just look at interest only, because you do have that option on a HELOC, and now on $500,000, you're looking at your payment going from $1,208 per month on interest only to $1,416 per month, which is an over $200 difference. This is signaling to the market that the Bank of Canada is taking a strong stance on fighting inflation, general rising of prices. And to do that, they have made this bold move of 0.5%. Based on the language that it's used in its update, is fully prepared to raise interest rates to what's needed to fight inflation. So there you have it. Hopefully that helped you break down and digest the big news that has come out today, April 13th, 2022. Hope you found value in this video and quick update. If you did, please hit that thumbs up and please subscribe so that I can help bring you more of this content. Thanks. Bye for now.